the people who are using them to some extent are in a traumatic place in their life for whatever reason, whether it's divorce, medical issues, okay, unemployment, layoff. And I think that's where the traumatic part to some extent is associated with payday loans. Nobody goes to a payday loan because everything's going great in their life. You're going to a payday loan because you need the cash. You need the cash right now because you're trying to save something that you're going to lose. Happy Thursday evening, family. Sorry we had to cancel the usual Thursday night live stream at 6 p.m. I've had 4 short power outages so far. It cuts down the computer deck every time. As you know, there's a tropical hurricane thing going on here in Florida, and I'm in Tampa. So we will live stream tomorrow at 5 p.m., assuming everything is working out well electricity-wise. So I appreciate your understanding and patience. All right. We're going to take a look at a PBS news story about payday loans. And even though it ran 8 years ago, it's more than relevant today. I will tell you my position on payday loans after having used them between not 1 but 2 bankruptcies. They're absolutely predatory. And I'll provide additional commentary as we go through this. But I want you to please keep an open mind in the sense that it's easy for us, or for those who have never been through it, to say, you know what, you got into this all by yourself, put your bootstraps on and figure your way out, it's your fault. But there are so many other factors, from emotional to financial, from just, round of bad luck. There's so many other factors that go into the payday loan trap. That's where you get a cash advance on your paycheck, and then when you get paid, you're supposed to pay back that cash advance, but oftentimes people can't, and then they take out another cash advance. It's just a mess, and it can literally rack up a person in the hundreds, okay, for the percentage rate, 200, 300, 400%. So let's take a look at this documentary. All right, thank you so much for joining me. All right, let me see. Where's the push button? Here we go. And oh, by the way, really quickly, I'm not going to be playing this documentary all the way through. There are parts of it that I want to pay attention to. So when you see some editing afterwards, you're going to see momentary cuts. It'll be a blink of the eye for you, but you'll want to know why, just for YouTube fair use and commentary purposes and all that. I am using parts of this documentary, not all of it.
But first, payday lending is a $46 billion industry in the U.S. About 12 million Americans borrow more than $7 billion annually from over 22,000 storefront locations. But the industry's practices have long been under scrutiny. Special correspondent Andrew Schmertz has the story from South Dakota, part of our ongoing reporting initiative, Chasing the Dream, Poverty and Opportunity in America.
Living paycheck to paycheck isn't easy. Sometimes you have to come up with creative ways to relieve the stress.
Good way to just live in denial is just throw away your bills,
How many of us have had bills and we just don't even open them? And when you have your phone ringing and it's a debt collector, you just don't answer it. And in the real olden days, I like to call it the real olden days because I'm 57, but before they had answering machines and all that, you had to answer the phone because you really didn't know who was on the other end. There was no voice messaging or anything like that, or call screening stuff to help you. You just had to answer the phone, and if it was a debt collector, you just go click and you hang up.
We already got paid anyway, so.
Christy McLaughlin and her husband TJ were getting by on TJ's salary as a manufacturing plant manager here in Sioux Falls, South Dakota. That was until TJ got sick.
I was working the night shift and I was on my feet a lot, and I had a couple of wounds start developing on my leg, and they were pretty small at first, and then they got infected and just started growing.
When TJ went to get treatment, the doctor said it would only take a day, but in fact he ended up missing a whole week of work.
They ended up docking my pay. We ended up being short on bills.
The lower on the socioeconomic scale you are, and I'm sure most of us know this, all right, the lower you are in the socioeconomic scale, the less job benefits you have. There are plenty of people that if they don't go to work that day, there is no income that day. All right, I know one of the most telling reminders I had of that was a few years back when I went to, it was Village Inn. It's kind of like Denny's that's now closed. I think Village Inn for the most part is closed too, but it's like a 24-hour restaurant. And I remember being there at 11 o'clock with a gal pal of mine. This was several years back. And there was a young waitress, probably all of 21, 22, pregnant. I'm like, honey, why aren't you at home? And she wasn't little pregnant, she was big pregnant. She's like, yeah, she goes, we have no perks, at this restaurant. So for many people, if they don't go to work, that's it. There is no pay.
I panicked.
So McLaughlin came here, a title loan place just a few miles from his home. He says the process was simple and quick. They inspected his car and then handed him $1,200 in cash. He agreed to pay $322 a month for a year.
Now, it's easy for us to say, well, nobody forced him to go into this place, into the payday. Nobody forced him to sign. But what we have to remember, when you are already low on the socioeconomic scale, I don't know why his wife didn't work. Maybe she was in charge of raising the children or something. That I don't recall them saying in this documentary why she doesn't work. But when you are low on the socioeconomic, ladder, and you become desperate, you will do anything to keep the car from getting taken, to keep the lights on. All right, you will do anything. And people who have never experienced that sort of thing, I think it's very easy to go, well, you should have seen it coming. I kind of say woulda, coulda, shoulda. Once the baby's born, it's a little too late to go. You should have, done something else or had family planning, whatever. Okay, it's like the child is here. The bill is due. The accident has arrived. You can't look at what you could have done. The situation is what it is. And desperation starts to set in.
I was making good money. I didn't really foresee a problem paying it back at that time.
I was making good money at the time. This is a dangerous, slippery slope financial trap. It's why on this channel, you've heard me say it many times, and I will continue to say it. When we take out something like payday loans, rent to own, things like that, you are banking that in the future, you're going to be able to pay that bill. You're banking on it. And part of the reason I purchased such a small place, what you see behind me, the reason I purchased, only 840 square feet and, basically paid $100,000 for my place in 2020 versus getting something much more expensive that I could have easily afforded. I could have done $200,000, 20% down with no mortgage insurance. I could have done that. But my past, being as horrible as it was between bankruptcies, I've had a foreclosure, when I got divorced more than 10 years ago, auto repossession. I've been through the whole entire financial gamut. I understand the risk of saying, oh, I'll sign on the line for something down the road because I'm going to assume that everything's going to go just fine. I was so scared to take on a very big mortgage. So I took on a really small mortgage because I wanted it paid off, because experience had taught me that committing myself to future dollars, especially when it's just me, okay, I have no one else to assist me. When it's just me, and I'd already, by the way, had one knee surgery. So I was like, yeah, the other knee could go too. And guess what? After I bought this place, about a year after, the other knee went also. Experience has taught me this. I mean, I can walk and stuff. It's just limited,
But then his leg got worse, and he had to go back to the hospital for another week.
And on Wednesday of the following week, the HR person called from his job and fired him. And on that day, we pretty much lost everything.
So is it still morally right? Is it easy to say, you see, this guy did it to himself. This is his fault. What you begin to find is there are a chain of events that occur that put a person in the financial situation they are. Now, we can choose to say, well, if you back it up 20 years, maybe, he married the wrong person. Maybe they had too many kids. Maybe they shouldn't have taken out that college student loan. Whatever the case is, you will find that there's really not just one thing and one thing only that puts someone in the position where they have to go to a payday loan. It's a cycle. It's systemic. It's part of the living life on the maybe borderline poverty level. Although I'm sure they said he was, I think, a supervisor or manager for a manufacturing plant in South Dakota. Now this video is, I think, it's about eight years ago. But think about how the economy's changed in 8 years. Think about all the businesses that have closed, gone overseas. So it's not as simple as simply saying, this is the guy, this is his wife, and they are 100% at fault. It's just not that simple. If I were to look at my situation in payday loans, next to telling you they were always embarrassing, I was always embarrassed to go into a payday loan. Matter of fact, I still am. There's probably a little bit of trauma over that. I would, whenever I would go to a payday loan, and I did it for years. When I say years, geez, probably over a 7-year span. I won't say it was as long as 10, but I would say it was over a 7-year span. In my mid-20s into my 30s, payday loans. I was fortunate in that I didn't have to use them like all the time, but once a month, even when I was married, which is part of the reason I'm not into self-employment. Okay, I don't want to get off on that track, but we use payday loans, and I think the hard thing about it is, I used to always feel like people were staring at me, so I would always either go in the evening when people couldn't see me walking into the building. There's a certain sense of shame. There's a certain sense of embarrassment going into those places. And the sad part is now, if I just want to go get stamps, I still avoid them. Not that I judge the people that use them. Heck, I used to use it. But it's a certain amount of, I don't like to use the word trauma because I think at times it can be overused. But the people who are using them to some extent are in a traumatic place in their life. For whatever reason, whether it's divorce, medical issues, unemployment, layoff. And I think that's where the traumatic part, to some extent, is associated with payday loans. Nobody goes to a payday loan because everything's going great in their life. You're going to a payday loan because you need the cash. You need the cash right now because you're trying to save something that you're going to lose. It's not as easy to just blame the person that signed on the payday loan, not when you hear the entire story.
But not the loan. After 9 months, the total amount they owed grew from $1,200 to over $3,000.
It's 9 months. And you know what's sad? With really good credit right now, because I have really good credit. I've had great credit for years now. If I needed a $1,200 loan, I could get one for 0% interest. Okay? The people who need the financial breaks can't get them. People like this couple, they need the financial break. But then, of course, it goes into a whole litany of, well, they're high risk and all of that stuff. I understand that. But let us just, if you hear rain, remember there's a tropical storm going on in Tampa, and I'm right by the window. But let's put aside just for a minute, that they did this to themselves and they're broke, and this is why some people would say, well, they deserve to pay back $3,000 over a $1,200 loan. Paying back $3,000. Does there come a point where we have a moral duty to make sure that the most broke and most vulnerable amongst us aren't used like this? Does there come a point where there is a moral duty, an ethical duty? Methinks there is.
That's an annual interest rate of more than 300%. Title loans and payday loans are supposed to be short-term quick fixes for people who can't get traditional credit.
But the problem is the people who have to use it, they're not in short-term quick fix problems. They're in constant money stream problems. Constant, the car doesn't work and has to be repaired. Constant, we don't make enough money to cover the mortgage, pay the rent. Constant, we can't afford the child care. It is not a, payday loans are not, yes, lip service wise, they're designed to be short term, just once or twice in the whole year, and then you don't use it again for another 5 years. But the reality is the people that are using them are in a permanent problem or in a very long-term problem that cannot be fixed by a payday loan.
Do you need fast cash? You've come to the right place.
And doesn't this commercial look wonderful? I mean, she's beautiful. She's well dressed. You know, I mean, this is sharp. And look at the people in the back. They darn near look like white-collar professionals. Just an observation.
They use high-energy commercials and bank-like storefronts to entice people to borrow money at triple-digit interest rates.
And remember, a lot of the people coming in may not, here in the United States, you've got a lot of people coming in that may not speak English, all right? You've got a lot of people coming in that don't have a lot of knowledge about finances. Not that it saved me, no, it saved my butt from 2 bankruptcies and stuff, okay? But still, you've got people coming in that don't know this stuff. I was eventually smart enough to figure it out. But you have some people, they don't have the mental capacity for whatever reason to understand what they're doing now, tomorrow, yesterday.
The problem? They are rarely short-term.
Exactly what I was saying. The lip service is these are short-term loans, so therefore a 200, 300, 400% interest rate is, irrelevant. I mean, after all, if you're only coming in once, what's $20 if you need to borrow 100?
Borrowers frequently need to take out a second loan to pay off the first one. It's called flipping.
Oh, and I could flip these loans like I could flip my mattress. Every other month, I was supposed to take the mattress and flip it around to make it last longer. Okay, my mattress got flipped less than I'd spent going to Amscot. And the thing is, because when you flip these loans, you're getting money. Okay, I need $500, and I'm gonna write you a check, for $600 or whatever their ridiculous going interest rate is. When you get into the payday loan cycle, you forget that you're paying interest on all this and you're just looking to survive. Remember, this is about survival. That's what this is about. People who are looking at these type of stories are going, well, I just don't understand why she didn't realize she was paying 300%. It's about survival. When you're surviving, you're not looking at the percent. You're looking to see if you can get the cash so you can get a hotel that evening, not lose your car to the repo man. Yes, and speaking of cars, yes, I've done the let's go hide the car so the repo person can't find it. And not to get sidetracked, but I think it's Ford. I did a thing the other day. Ford, I believe, is the first company to come out with a GPS locator that will not only find your car by GPS, it can kill the ignition and even turn the car on and drive to the place of pickup location for repossessed cars. Yeah, expect to see that in the next few years. The invention is already there. It's just being perfected. So hiding it from the repo man, that'll be like the days of yesterday. That'd be like looking at 8-track tapes.
The average payday loan in the United States is flipped 8 times. They're a debt trap that's intentionally marketed to the financially unsophisticated, intending to lock them in on something that they can't pay back.
When asked about capping rates at 36%, the one payday lender who did speak with us was unequivocal.
It's a kill bill for the state. The entire lending industry would be out of business with that.
Basically what they're talking about, the bill is to cap how much payday lenders can charge customers. In other words, get rid of the 400%. And this dude who owns a payday shop says, but if you don't let us charge 400%, 300%, whatever, we're all going to go out of business.
Chuck Brennan, a Sioux Falls native, is the founder and CEO of Dollar Loan Centers, a chain of more than 90 short-term lending stores with 11 locations in South Dakota.
We have a huge customer base. In South Dakota, we've had over 40,000 applicants for loans over the years. Over 20% of the state who's over 18 has applied for a loan.
Okay, I cut him off, so let me read it. Over 20% of South Dakota is over 18, has applied for a loan. This is why it's hard to simply look at the person that's taking out the payday loan and say it's your fault. When you have a state that is so impoverished that 20% of the people are going to a payday loan, is it as simple for us to be able to point a finger at a man, a woman, and say, it is solely your fault? It is systemic. It is built into this system, in my opinion, as a way to leech money from the most vulnerable amongst us in society. And even though I had to use it, I could not consider myself the most vulnerable. I was just stupid. I had a college degree. I didn't understand how to read finances. I was riddled with mental health issues. So my situation was more of mental health issues than anything else. But you are talking a state where there is so much poverty. So just because your state has a lot of poor people in it, does that give the businessman the right to say, well, look, we've got all these poor people and we need to help them. So yeah, we're gonna help them, but we're gonna make them pay 400%. As I said earlier, does there come a point where we, as a society, have a moral and ethical duty to take care of people who are financially vulnerable? 20% of the state. That's a lot of people. That's also a lot of loan sharking.
Here, which really shows there's a need for the product out there.
Just because there's a need for the product doesn't mean, in my opinion, it doesn't give a business owner the right to rip people off at 300, 400%.
Further, Brennan says a rate cap will actually harm the people it's intended to help.
It isn't like when the industry goes out of business, people are going to stop needing money. They're going to have to turn to online loans, illegal sources, and something that the state can't regulate.
Online loans and illegal sources. Well, I saw a documentary not too long ago, and it said a loan shark charges about 40%. Now, I don't know about you, but I'll take Mr. Loan Shark, okay, over going to a payday loan. And when we talk about regulated by the state, what exactly is being regulated by the state? Not much from what I can tell. What I see going on with the state are a whole lot of lobbyists, all right, going into the halls of Congress or, their state legislature, wherever the assembly is meeting, and wheeling and dealing to make sure they can continue paying 300-400%. At this point, knowing what I know about payday loans, I would tell someone, you know what? I think we need to go online and we need to find you a loan shark because they'll only charge you 40%. It's really interesting how when people are ripping other people off so severely, they can say, but our services are needed. We're providing something to the poor and the indigent. Let us rip them off, because if we're not here to do it, really what they're saying is we don't want someone else to be able to do it. Look, there's no state regulation going on this. Oh, and also in Oregon, I believe payday loans are no longer allowed. They're either, in Oregon, which is my home state, it's either no longer allowed or the rates are severely capped. So it's starting to spread slowly. Slowly the news is getting around nationwide that these payday loans aren't so good. But in some states it's illegal. I think in my home state of Oregon it's now illegal. Clearly it was not illegal, when I was in my 20s. And they were all over. And of course they're always in the, rough neighborhoods.
In the meantime, TJ ended up losing his fight to save his leg. It was amputated 6 months after he lost his job.
If you were telling him it was all his responsibility and it was the choices he made, when you hear the whole story, do you think there's more to it?
It needs to go at least to there.
TJ and Christy are now focused on rehab instead of the title loan.
I told him to come get the car. Take it. You know, our world is falling out from underneath us, and if you want it that badly, come and get it.
What do you think the payday loan people did? What do you think the payday loan people did? Do you think they looked at their situation and said, "Man, you know, we're charging you 400%, and this is for a car that we only, you know, we only paid you $1,200 for. We've got the humanitarian part in us, and we see that you clearly need the car more than we can." Do you think the payday loan people did that?
Over Thanksgiving, the lender repossessed their car.
People can get sick, and you know, if it's serious enough, they can lose everything. We lost everything in a matter of a week, it seems like.
TJ and Christy may have to find their way out of this devastation on their own, but they hope by speaking out, they can at least save other South Dakotans from becoming trapped in a nightmare of high interest rates.
All right, so anyways, let me just make the screen a little larger here. Hold on here. All right, so I will be doing more videos, documentaries on payday loans, of course, student loans, too much house, too much car, and all of that. But my goal in this video is just simply to show you, you know, as someone who used payday loans, and I used them so much. I'll tell you this, when I got my car repossessed in my early 30s, I was using payday loans at the time, and I could not afford to pay the payday loan back. And so not only was my car repossessed and I filed bankruptcy, the two payday loan companies that I used, I couldn't pay them back. And there are systems now in place where you can't payday loan hop. So you can't go to one payday loan, you know, at 2 o'clock and at 2:30 go to another one and keep hopping around, because the payday loan companies quickly realized that all the broke people, we, and myself included, okay, we were running around doing that. And by the time I had completed my second bankruptcy in my early 30s, which was over the car repossession for about $16,000, a small amount in today's dollars, but when you've been laid off twice, right? But in those days, I could pretty much go from payday loan to payday loan, so it wasn't difficult for me to get two loans. So if you think flipping one loan is hard, try flipping two. I'm Carrie. This is Consumer Debt Chit-Chat. I hope you'll consider subscribing. Don't forget, we're live streaming tomorrow at 5 o'clock, assuming all things are going well. I'm so glad you were here. Well, folks, my time is up. Stretch. And so is yours. Good night, everyone.